Comes pretty close, but not quite. It does hit 20 pips, however, so we move our stop loss to break even, okay, which is right there. Now, price comes down and almost touches our stop again. It almost gets our entry, okay. We almost get taken out at break even, but what happens? We get a bounce off to 80, and that's why these longer-term moving averages are so important. That a lot of times they'll bounce off of them, and when it finally bounces off of this, we get our signal here. We get another entry handle here. This would have been a little big. That would have been a 30 pip stop, so that might have been a little big for the 15-minute chart, but that's great confirmation that the trend is still intact, and our stop never got taken out. We were not taken out at break even, okay? And if you remember, we're looking for 40 pips on this trade. Well, there you go, 2 to 1, and the market just takes right off, okay? So this is a great way to trade, okay? You'll have more break-evens than you will losers, and you will have bigger wins than the losers as well. Occasionally, you'll get stopped out, on the 15-minute chart for, however many pips your stop loss is, or you'll get a direction change like back here, and that will either take your stop out, which in this case it would have, or it will break short of your stop, and you'll have a confirmation that the trend is changing, okay? And you'll get out with a smaller loss than you would have had your stop been hit. So this is a great way to trade. This is a really great way to trade. And on the 15-minute chart, these moving averages will change directions, a couple times a week. You'll get nice trends on the smaller time frames with these longer term moving averages like this, and they'll change directions often enough to where you can trend trade. What you think is a trend on the 15-minute chart, which this turned out to be a very nice trend, okay, will oftentimes be a pullback on a higher time frame like the 1 hour or the 4 hour. And basically what you're doing with this kind of method on the smaller time frames is you are trend trading a counter trend move from a higher time frame, okay, and it's very safe, and you can get in there and you can pocket some nice money, some nice pips, and play it safe and take the middle third of a counter trend move off the higher time frame. And when the higher time frame changes directions, you're going to be right there when it happens. And this is an awesome way to do it. The moving averages, Philip, are the 8, the 20, the 32, and the 80. Okay, and those are all exponential moving averages. This is a good question. Do I trade other time frames as well? I will. Generally I'll trade the 15-minute charts, the 1 hour or the 4 hour charts. Those are the 3 time frames that I generally stick to. I'll look at the daily and the weekly sometimes as well for overall direction, and if I've got if I'm a little unclear as to if I want to get a good perspective, okay, I'll look at the higher time frames. I'll definitely look at the daily every day. The weekly, usually once or twice a week, just to get to remind myself where things are at. And that's kind of how I'll do it. I'll look at, if I'm trading the 1 hour, I'll look at the daily 4 hour and the 1 hour, get a good view of what's going on. If I'm on the 15-minute, I'll look at the daily 4 hour, 1 hour, and the 15-minute. So that's kind of how I do it. I want to get a great overall perspective on what's going on in the market. I do. This is one of my favorite things to do. I love this setup. I love these setups, and I do use this. This is something that I came across and kind of worked into my trading style, and I absolutely love it. And these moving averages work really, really well on the 15-minute time frame, and you'll catch like, let's see here. Let me get rid of all these lines, and I'll show you what I mean. We've got the moving averages cross over here. Okay, they kind of cross here. Okay, but we get let's see. This wasn't a very clear cross, so I would be waiting on something here. I would probably be more inclined to take a long position off this candle because there's not much. We were in an uptrend. We had a nice pullback, and then we had a bounce, a clear cross above these back in the direction of the original trend. Right here, though, was an awesome entry. Price came down, everything crossed over, and we got a nice rejection off the 80 right when everything crossed over. That was a beautiful entry, a super small stop. I mean, you can't ask for something better than this. Okay, but what I'm going to show you here, I'm going to mark out these crosses of the moving averages, and then I'm going to jump to the 4-hour chart and show you something really cool. Okay. Okay. There's that one. All right. So I've got 6 places that the 32 and the 80 crossed. Okay. Now let's flip to 4-hour chart. Okay. These are all the places. These are all the places where the moving averages crossed. All right. Now, look how close to the top of each of this move it was. Okay. It was right at the top of the move in the 4-hour chart. Okay. This happened. This cross here happened right in here. It crossed up, and there was a kind of a failure here. It didn't amount to much, and that's why it went sideways on the 15-minute chart. And then over here, the moving averages on the 15-minute crossed down again, and look at where it crosses in relation to these swing points here. Very close to the top here, very close to the bottom here. Okay, very close to the top for this move, for this cross. Very close to the bottom of this move. Close to the top, for this move down. Close to the bottom for this move up. Okay, so that's what I like about these moving averages. They will cross. They'll kind of help you see tops and bottoms on the 15-minute chart, or they'll help you see tops and bottoms on the 4-hour chart from the 15-minute. Okay, when they cross, you can look at the 4-hour chart and take a look. And even in this case, okay, right in here for this first one, you can take a trend line, draw it out, and take a look at that. It's getting ready to poke that trend line. Okay. You can even draw a trend line up here, a little steeper one. Okay. And on the next candle it crosses. And this is, this is where your judgment is going to have to come into place. Place it in a reasonable area. But you can get a lot of confirmation off the higher time frames, and you can get some nice reversals out of this. Okay, so the reversal method, it can be used. You can use this method as your trend following method and your reversal method. Okay, if you keep your eye on the higher time frame. Yeah, Daniel, this is the reason I've done this. The reason I picked these colors. Daniel, you're right. It does hide the lines. Okay, it does hide the lines on the darker background, and the reason I've done that is so that they don't get in my way. Okay, and I don't really like them being in my way. If I can thicken these up here a little bit. Well, I'll leave the red and the blue. I'll change that to I can change that to green. You guys can pick whatever colors you guys are comfortable with. You can even make all these kind of thicker. Okay, so there's that. Thicken these lines up. Let's make this one yellow. All right, now we can see them. Now we can see what's going on. Okay. No problem. I apologize for that. You know, it is a lot more clear when I thicken up the lines and change the colors a little bit. You can see them a lot more clearly. So I apologize for that. But this is a great method and a great way to determine, you know, where the tops and the bottoms are on a higher time frame. And you know, this happened to be, if I zoom out here a little bit, okay, this was the end of a move down here, okay, and you wouldn't necessarily have known that until you got, you know, we had a big move down here. Okay, this is a great move down. You wouldn't necessarily have known that when you got the pullback here. You just thought, oh, okay, that's a continuation. So when we zoom in and we take a trend line and we draw it across the tops of price, we get our entry, we draw on our trend line, and just in case, and when that breaks, we can pretty well bet the market's going to turn around. Okay, and that's what we're looking for. That's how we're playing it smart. And we want to be smart when we're trading. We want to be as detailed as possible, and we want to take every precaution that we can. Now, that's not to say that, you know, we want to freak out, you know, every time a move happens, okay? Because we'll get some, you know, we'll enter a trade and then we'll get a bullish candle on a sell trade, or we'll get a couple of bullish candles on a sell trade. That's what our stop's there for, okay? And that's what our trend line is there for. You know, and if it breaks the trend line or hits our stop, okay, we'll just wait and we'll move on to, you know, move on to something else. So hang on a couple of seconds while I get to some things here. All right. Larry, that's an awesome question. What are my thoughts on a trailing stop? You know, that's a great thing to do. What you can do for this particular trade, okay, that was a kind of a bigger stop, but it was an awesome confirmation that the market's turning around. So let's, for the sake of example, okay, this was a big candle, and I don't think I would have normally gotten in on something like this just because it was too big. Okay, I would have waited for something a little smaller, something a little tighter. So, you know, but just for the sake of example, let's say that we would have gotten in here. Okay, our stop would have been down here. All right, so yeah, that was a little big. Okay, right around a 33 pip stop. Okay, now once the market moves up 33 pips in my favor, I'm going to move to break even immediately. Okay, so I'm at break even. The other thing I can do is I can trail my stop below these swing points right here. Okay, the market moves up, makes a nice swing point right here, so I can trail my stop up below that. Okay, the market moves up again, it, you know, stalls here and then moves away, so I can trail my stop up again, stalls here, okay, and bounces off of this moving average, which is done a number of times already. So I can even move my stop loss up here just below that, okay? And I've locked in my profits already. It would have been I would have been looking for about 66 pips. Let me see if I can, let me see if we would have gotten that already. We would not have gotten 66 pips out of this, okay? We would have gotten darn close, but we got, we hit that area and then we fell away. This was the top of this particular initial move, okay, and we fell away. And by trailing my stops below these swing points, I was taken out, but I was taken out with a profit, okay. So we would have gotten 47 pips on this. So that's how you would do that. And then on this particular trade, we'd have either put our stop here, which would have been about a 28 pip target. So we'd have definitely hit that. If we placed our stop here, we'd have been looking for 50 pips, and we definitely hit that. So, and there wasn't any place to move our stop loss, or move our trailing stop. There really wasn't a good place to trail our stop with. So that's how you do it. Hang on 2 seconds. Well, I'm actually running out of time here, but I've got a couple more questions. Whoops. I'm sorry. Let me get to where I was. Apologize for that. Here we go. This is going to be fun. I want to take a couple more questions here before we close. Do I always use a stop profit? You mean a trailing stop press? Or keep my options open? I will use a trailing stop. My take profit would be a trending market. I'm sorry, my take profit for a trending market would generally be a 2-to-1. I definitely want to. I want to make some money, and when you have a trending market, you can make some money. You're going to let your trade sit there for a little longer, but you can definitely hit 2-to-1 very easily on a lot of those things, or on a lot of those trades. I do use a trailing stop. If I can get a place to move my stop loss, like a swing point to move my stop loss to, I will do that to lock in some profit. So in case the market doesn't hit my take profit and comes back against me, then I'll be taken out with some profit. And that's the name of the game. You move to break even as soon as possible, and then trail your stop and lock in that money. Okay, the name of the game is not to lose money, period. When you sit down to trade, you trade with the goals of not losing money. So that's how you do it. We are actually posting these webinars on Facebook and on my blog, so you'll definitely want to take a look at those. And what you guys will need to do, we have two copies of Forex Profit Model, and as a thank you for writing a review, we're going to choose 2 winners to get a copy of Forex Profit Model. So head over to the Facebook fan page or my blog. Facebook, again, is facebook.com/Forex Profit Model, or my blog at forexprofitmodel.com/blog. So go over and check those out. Leave a comment. We want to hear from you guys. We want to help you guys out. We want to make you guys profitable, and that's what we're going to be doing. We're going to be helping you guys, and we're going to be putting some stuff together, and showing you guys how to do this and how to do it right. And that's our goal. We want you guys to be profitable, and we want to help you guys out as much as possible. So head over there and leave some comments, and we're going to be choosing 2 comments, and we will let you guys know who the lucky winners are next week. So thanks for coming out. That's all I've got time for today. And yeah, you guys have a great week. And next week I'll be showing you guys some more of how to trade reversals, some more of the reversal method, the range, the breakout method. I'm gonna be going over that stuff with you guys. So stay tuned for that. Definitely leave some comments. Let us know what you guys think, and we'll get moving on that.